Why is my cash balance different to my profit? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Why is your cash balance different to your profits? Now, this is a question I get asked regularly of how have I got a profit, how have I got tax to pay, but there's no money in the bank, what's happening? So I thought I'd do a bit of a video on why we find that we've got discrepancies between the two. Now, a key reason why we've got differences between what's in the bank and what's in the profit is potentially a timing thing. Profits are done on an accruals basis generally, and cash is cash. It's cash flow. It's what's happening in the actual reality of business. So if we look at what the profit side of things, how that's working, that'll help explain why we've got a difference between what is our profit figure and what is our cash figure. So our profits are very much based on what is the income in that period, what are the expenses in that period, which gives us the difference, which is profit. And this is very much talking about your income and your expenses. It's not talking about paying off loans. It's not talking about if you've not had the money in or not. It's very much a black and white picture of what is happening in that time period to give us the profits that are then taxed. Whereas if we look at the cash side of things, that is what cash is there now. So if you've, say, had to pay an investor back, you've got less cash in the bank. If you're paying loans off and mortgages off, you've got less cash there. Now, if we just look at those examples, if we've got a loan, then that is not impacting the income and expenses, the profits figure. That is just impacting, arguably, the balance sheet, basically. It's impacting what you actually owe people, but it's not actually having any direct impact on what profit you will be making. So you've made a profit, but you're actually paying people off. So you're losing cash, but the profit still will stay the same figure. And that kind of stays the same with a loan or a mortgage. The mortgage, the interest on that mortgage is going to be an allowable expense. So if you are paying repayment mortgages, you're not going to be finding that you've got anything different. If you're paying a repayment, you're paying a little bit of interest and a little bit of capital. So you're paying more out, but you're not getting the impact on your profits. Now, if all your mortgages are interest only, then that's slightly different because the interest only mortgage is an allowable expense. So that is going to be making your profits very similar to your cash balance. So as hopefully you can maybe see, it's very much coming down to a timings point of view. Because if you've got money that's owed to your business as income, in the income and expenses side of things, we're going to be showing this income as income. Whereas you may not have had the cash yet, so your cash balance is actually lower than you're expecting it to be. So we're kind of seeing very clear differences here, that it could be to do with timing of when things are coming in and out of your bank account compared to when, from a profits point of view, we are going to be seeing the actual profits. And also it could be that some of the things you're paying out from a cash point of view are having absolutely no impact on the profit. Because if, for example, you're paying a private investor back and you're paying them 20,000, you've just got rid of 20,000 cash out of your bank account. However, in your profit and loss account, your income and expenses, it has absolutely no impact whatsoever. The only little bit of impact is going to be the interest that you've paid them or the fees that you've paid them, which means your profits are down a little bit, your bank balance is down a lot. So I thought I'd put some numbers to this because hopefully numbers make the story come to life. So let's dive into some numbers to just show you a few examples, and then from that point of view, we can see how it fits together. Let's look at an example. Let's see what the difference is between our profit number and our cash number. So in our example, we're going to work on the basis of a rental property to see what profits we're actually making in the period. For this, let's just literally look at a month for now to keep it as simple as possible. So we've got our rental income that we're going with, which is £1,000. We have some mortgage interest that we're paying, of 500. We've got our insurance, which based on an accruals method, we've got £50. So accruals method is where you are looking at what is actually being spent in each month and accounting for that cost, whether you've paid for it or not. We've got £100 of maintenance, which is giving us in that period that we're looking at with the expenses I've put through in this example, the profit is £350. So for this example, our profit based on an accruals method is in at £350. Now let us jump across to the cash side of things. And we're actually saying our opening bank balance is actually at £2,000. So although we've only got £350 profit, we've got £2,000 cash in the bank. Now the reason we've got £2,000 in the bank is because that's funds that have been potentially put in by the owner when it was set up. It could be profits from the past that is sitting there waiting to be done. So at this point we're saying our profits and our cash figure is noticeably different. Now the next question is, of the different expenses, what has actually happened? So if we look at rent, has the rent actually been received? So if we say the rent has been received in the period we're looking at, we've now got an additional £1,000 on top of our £3,000. Now, when does our direct debit go out for our mortgage is quite a crucial question. So if we said our direct debit goes out every month around the middle of the month, then that's fine. We have also spent our £500. Moving on to our insurance, the question here is, how is it paid, monthly or annually? And we're going to say this is paid annually. So on that basis, in this period, I'm going to go, there's been no amount paid for insurance. So we don't need to make any cash adjustment for our insurance figure. And the final expense that we had mentioned in our profits approach was the maintenance. So the question here is, do we have any credit? And I'm going to say yes, we've got some credit. So although we've got £100 to pay and we've paid our insurance annually, during this actual month, in terms of the cash movement, we're not actually going to see that cash movement until next month, which actually means our closing balance now is our 2,000 add our 1,000, which is 3, take off our 500, which actually means that we're now better off in our bank account by 2,500 being our balance carried forward. So as you can see, depending what the cash movement is and what we may have put into the business or not put into the business, this will have an impact on what our cash balance is. And when we look at them side by side, we'll be able to see we've got £2,500 cash in the bank, but in that same period we've only made £350 profit. So there's a difference between what your profit is going to be showing and what your cash is going to be showing, because we have these movements in our timings of what the money is doing and what the actual kind of accruals accounting point of view is dealing with. So when you are looking at your accounts, the accounts numbers are not always going to show exactly what is in the bank account. Because for example, if you've paid off an investor, you may have a lower bank balance, but your profits are still showing good profit because you have made a profit, but with that profit that you've made, you may have cleared off some of the debt that you've got. So you've got less cash than you would expect based on the profits, but the business is probably in a healthier position because it owes less people money. So there is very much a difference in timing. Now, if you receive your rental income every month, you pay your mortgage each month, your insurance, maintenance straight away, then theoretically the movement between the cash balances would be the 350 and the cash would be the same as the profit. So it's not to say that it cannot be the same, it's just the key point here is it's not necessarily going to be the same because there will be differences in cash movements. For example, if your rent isn't paid on time and they pay a month late, you're not going to have that extra 1,000 in the bank, but you're still going to have to pay those expenses out because the mortgage company is not going to forgive you for not paying for a month. So it's these discrepancies that we just need to be aware of, and that is why we don't see the cash balance is always the same as the profit, and it's probably more likely than not going to be the same because of extra money you're putting in to cover bills or not cover bills, just to make sure you've got a sound footing. And also, it depends what other expenses you've got going through from a profit point of view, but you may not actually have physically paid it yet. It may just be accrued because you know you're going to have to spend that money and it relates to that period, which is how the accruals basis works. You are matching the financial transactions to the correct accounting period, even if you have not fully paid those balances off from a cash perspective. Hopefully, having gone through a bit more of an example, it gives you more of an idea of how it all fits together. Hopefully those numbers have given you an idea of how it's fitting together and how you can see that the cash balance is not always going to be the same as the profits figure. You may have less cash or more cash depending how it's all fitting together and the timing of some of those transactions. If you've had more money in from investors, you'll have lots in the bank, but you still won't have the profits there to take them out as dividends, take them out as income. And alternatively, you may have just paid an investor back, which therefore means you've got very little cash in the bank, but it's saying that you've actually got profits. Well, you possibly have got profits, but your cash has all disappeared because you've reduced the loans that you have in the business. So there's a few discrepancies with how this fits together, and hopefully just getting an understanding of how it fits together helps you to see how you need to be running your business. Hopefully today you've discovered why your profit and your cash balance may not be the same and how it fits together. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.